Alright guys, welcome to the channel. Gold has been a popular topic recently as we recently broke that 1800 level, which is the highest price point gold's been at since about 9 years ago. In fact, this time last year, if we check the charts here, you can see nearly almost a year, almost 9 years exactly, and we haven't been at 1800 since then, and we recently broke that price point. And I want to share with you some technical analysis. I want to share with you what I'm looking at on gold, a couple of opportunities depending on what plays out. It's all about patience. We're at a kind of decision point right here, and I'm going to share with you kind of what some of the newbie traders might be looking at and how they get caught out. You know, the uninitiated, the ones that jump in and get excited and then they're in too late, because now is a perfect chance to get in too late if you're looking to buy it up. Also, what's likely to happen next, how the price is likely to play out, and what opportunities are there in the coming months or weeks or months. So I'm just going to do a quick rundown of what we're looking at here and how you may be able to take opportunity of this and take advantage of certain levels depending on what type of trader you are. So I'm going to give you a couple of examples here. So we're using pure technical analysis. Okay, you can ignore the exponential moving averages on the chart. I'm just going to use pure price action here, and I'm going to be explaining using price action. So the first thing that I mentioned at the start of the video is this previous structure resistance level. Okay, so let's just draw on this little zone here where we can see the high, and you can see we've just recently approached that zone. I'm going to be taking a look at that in a little bit more detail in just a sec, but before we do that, I just want to kind of put the upper and the lower zone bands on using these horizontal lines on TradingView. And now we're going to forget about this, okay? So we know we're at previous major structure resistance, okay? I'm not going to look out further historically. We're just going to go straight into today's price. And as we approach that zone, many of people have been saying, oh, gold is going to the moon, you know, we're going to keep going, it's going to go higher and higher, we've broke 1800, let's all get long. And I'm just want to kind of give you some food for thought here, because what I'm looking at here is the weekly chart, right? Now, what you can see is strong bullish momentum, okay? So we had 1, 2, 3, 4, 5, 6, 7 bullish sessions in a row. This is the weekly chart, okay? And yes, we have penetrated that high, that previous high looking left, but this candle hasn't closed yet. All right, now look at this strong bullish momentum. We all know that this doesn't go on forever. Okay, there has to be a relief. There has to be a rollover. We have to see some exhaustion at some point, some slowing down, right? Some deceleration. And that's what I'm expecting to see around this zone. Not just because it's a previous structure high, but also we've got the 1900 flat level, okay? But also we've got the 2000 flat level. Okay, so I'm expecting some sell orders. Anyone who's buying up here will start taking their profits off by activate or getting their sell orders filled around here. And anyone who's looking to sell this at the previous structure as a counter move will also have sell orders here. So as those sell orders start to be triggered in, we're likely to see price run out of steam and see a little relief rollover here, right? Now, the reason I say it's a decision point is because, yes, currently we're trading above this previous high. Okay, so the high of 2011 is 1922, there or thereabouts. If we break 1922 and close above 1922, yes, there'd be an opportunity to potentially buy that up, depending on how we behave at 2000 flat as well, remember. But it all really stems from this candle. So the beauty of waiting and being patient on this, if you're looking to invest in gold or buy gold or sell gold, whatever you're looking to do, is just having the patience to wait and see what price action tells us. Because if we end up pushing down and closing this week, right, today is Friday, if we end up pushing down and closing down here and the candlestick looks something like this, well, there's going to be a very, very high probability that we're going to see a rollover there, right? So if we close below this low and we've got this high test candle wick and this doji or hammer or whatever you want to call this high test candle wick, there's a very strong probability that we're going to roll over and we could see a little short trade there through gold, right? So I'm going to go through kind of some positions for targets on that and how you might enter that in just a bit. But look, if we do break and close above, then guess what? Then we're still likely to see the rollover, but guess what? This major structure resistance zone is very, very likely to provide some support. So what I'll be looking at is if we break and close above, I'll be looking for a pullback to 1921s to see how price is behaving there. Maybe get a higher close or a 3-bar reversal or some tweezer bottoms. And if we're pushing up, right, then if we close below, if we end up closing below, I'll be looking for a shorting opportunity, right? So it depends how price is playing out on this weekly time frame, as how I look at it as a macro perspective, and then how I enter my my trades. So this is the weekly time frame. Let's just go down to the daily quickly. So you can see on the daily, yes, we have closed above that high, right? But price is slowing down here now. Price is slowing down as we're approaching the higher 1900s. Those of you who've got a thesis and a bias that we're likely to rocket to the moon, okay, and you know something I don't know, this would be where you're looking to get in, right? This level here, you might already be looking for that. I won't be personally looking at anything until the weekly candle is closed. So that's what I'm looking at, and let me just go through the targets then. So let's just fly out to the weekly again. Let's just go out to the weekly. In terms of target taking, what I'll be looking at is this, okay? So we're not being greedy for the rollover. All we'll be looking at is structure levels, and the structure level I've got my eye on here is just above these previous levels of resistance, okay? Because I don't want to have to fight price. I have to make sure that I'm getting out at the highest probability zone. And also another clue here is this ascending channel here where we broke out to the upside. Whoops. This level here has some significance which lines up with that previous structure as well. So what I'll be looking at is just getting my targets above that price point there. So if we just color that in green and thicken that up a little bit, and something like this, okay, and you're going to see again, if it was in a long and we were going in the direction of the trend, I might have bigger targets, but for me, for a rollover, a relief, I want to get in and out as quickly as possible, and I just need a 1-to-1 minimum, preferably a little bit more. And if we can not squeeze up too much higher, I can start looking at stop placement here. Obviously, I can't do that until we've closed. I've clicked on the wrong button here. Let's make this red. Okay, and that's kind of what the risk-reward profile will look like for me if I can get involved, depending on where we close. Remember, we have to. This is a kind of worst-case scenario if we close below the low, and it's still not a bad reward to risk for a quick in-out counter move. Now, if you're looking to buy this up, then you've got to be a little bit more patient. You've got to wait for the pullback. You can pull back down to the daily time frame, okay, and you could look to get involved in an intraday or a daily time frame where it's a bit more. We're a bit closer to the opportunity, so you're just essentially waiting for a pullback down into this zone, and then price to give you confirmation and any filters that you might add to that in order to get long. Okay, now I wouldn't be confident to shoot above 2,000, so I wouldn't have my targets above 2,000, put it that way. So that's really what I'm looking at, guys. That's my analysis on gold for now. As I say, we're not quite where I would like it to be in order for me to give you more details, but that's kind of what I'm looking at, and I just wanted to reinforce the importance of just being patient, just waiting for those high probability setups. The market doesn't care about your money or your mortgage bills or your food bills, so you shouldn't be shooting from the hip unless you've got tons and tons of the stuff to throw away carefree. So that's it for the video, guys. If you like this, put your comments. I'd love to know what you think is going to happen to gold and your analysis. Share it in the comments and I'll engage in the chat. And until next time, have a great rest of your day and weekend, and I'll see you then.